And welcome everyone to another Port Jackson Securities webinar. Thank you very much for attending this webinar. We're looking at mining at the moment. So we're looking at Wiluna Mining. It's a major corporation in Australia, especially in WA. We're joined by Executive Chair Milan Djurkovic, and he's going to be presenting a bit of presentation. As always, this is just for information purposes. And nothing of this should be taken as any financial advice. So we might go through a bit of presentation. As always, people, if you want to have your questions, you've got a little drop-down tab. Send through your questions and we'll answer them live at the end of the presentation. But Milan, thank you very much for coming on today, and thank you for once again meeting us again.
Thank you very much, and good afternoon. Well, good afternoon or morning, depending where you are, to all of you. Good to be back in Australia. Just got back on Sunday night, and having travelled extensively for the last 7 months and not contracted COVID, and most of the time in London, I actually got COVID on the plane on the way over. So I'm actually stuck at home for 7 days before I can get to the office. But anyway, it's good to be back in Western Australia. Wiluna Mining, we're a gold producer in central Western Australia. We're at the top end of the major gold field, the Wiluna Norseman Goldfield. This first slide I've got here is really our concentrator that we just commissioned in December. We've been in a investment mode for the last 18 months, drilling, mine development and construction of this new facility. This started in December. It's going through ramp up now. The concentrator is operating at above nameplate capacity, about 20% above. The mine is only just starting to get to ramp up, with being dominated by development and low-grade ore. We expect to be operating at sort of full capacity in the mine, where 80% of the ore is stope ore, around that 3.5–4 gram or more, as we develop into the ore zones. We're essentially while we're an operator, we're about to double production from about 50,000 ounces to around that 120,000 ounces run rate in the second half of this year. We come from a modest production of about 50,000 ounces, and we expect to then improve the cash flow profile, and this stage one would maximize cash flow from what we spent. We are in the process, obviously, of doing extensive work on our large resource inventory that's drilled. We continue to drill as well, and I'll explain about the drill rigs on the surface and underground, continue to expand the size and scale of both the resource base and the geological understanding of this very large footprint that we have in a single location. We are endowed with extensive infrastructure, power lines, water, gas, pipeline, sealed road, and incumbency. Obviously, the asset's been there for a long time, so we inherit a lot of good investment that's been done that helps us move forward from there. So the main focus for us is our ramp up to commercial production. There's a feasibility study update that will come towards the end of this month or early April, from the work that's been done to date, with then a path as to how we maximize cash flow from what we've done. And then there'll be an ongoing exploration to continue to expand the scale of the geological system that we are on. Regionally, we're going to start doing some work on our other systems. We also have some potential for nickel and lithium in our general tenure, which we haven't done any work on, which we're only starting to work on now. We're about a 200 million market cap. We have a very large shareholder, two very large shareholders in Germany, Thomas Suez, 35%, Mr. Geyer, as well as Germany, has got about 10%, and then we've got various other funds, including Franklin Templeton, Gold 2000. We are dominated by European shareholders and some North American, and we are in the process of getting to a standard London LSE listing, probably in May this year, which is really at the request of our shareholders, and also to look at bringing to the London market a safe jurisdiction, growing gold company that is somewhat unique in terms of the other assets that are currently available to be invested in on the London market. As I said, we're at the northern end of the gold field, 1,600 square kilometres. It's the first time in history that this geological system has been consolidated into a single company. Obviously, we've had limited balance sheet capacity to fully tackle that geological endowment and potential, but that will now start in earnest over the next couple of years, that we start to generate cash flow and hopefully get to some of the other opportunities that we have in this. We believe that certainly in the next 5 years we can demonstrate, and probably less, that this is a single location, 10-year plus tier 1 asset. In other words, be able to demonstrate that they can produce 250,000 ounces plus over the longer term, if not more. But it needs some extensive further drilling and exploration. The endowment here is already 10 million ounces with 4 million or so mined, 5.5 million ounces still in resource. The high grade envelope is above 5 grams in the ore body that we have, and we continue to look at studies and infill drilling of this inventory to convert it into long-term reserves. So our reserve work will continue both underground and from the surface, and we'll put a reserve update out towards the end of this month, but there'll be a further substantial update towards the second half of this year through our normal annual reporting timetable. So we're a producer, hopefully at full capacity. We have put an announcement out yesterday. We have had some short-term issues with COVID in terms of the ramp up. We have all the equipment on site. We do have the people available, but they're just soft work due to COVID protocols. But we expect to be able to get back to a normalized situation within the next few months as the COVID situation peaks in WA, and we can put all of our workers to work on the equipment that we already have mobilized. And as I said, you watch the space on exploration. We've got 4 rigs underground, and we have currently 3 on the surface, but we'll continue going forward with at least 6 drill rigs continuously drilling, a couple on the surface and 4 underground, to continue to expand the scale and the knowledge of both the resource inventory and the exploration upside as we go forward. Simple flow sheet. We have currently an existing crushing milling circuit feeding a CIL plant. When we commissioned the concentrator in December, that crushing milling circuit now feeds the flotation circuit that you saw the picture of, and there's a new tailings dam that's in almost constructed in a couple of months' work. And then we're building a tailings retreatment plant, repulper there. That'll mean that when we mine anything from the underground or around where we can produce gold doré from anything that's leachable, or is gravity gold, and anything that ends up as sulfides in concentrates will be sold to the market. We have contracts for the next 3 years for all concentrates that we produce at Wiluna, and that'll end up in the international market, going into smelters in India, Korea, Japan, China, essentially. We'll put a bit more out in April about the path forward post that stage 1 optimization, which we're doing now, and getting maximum utilization of capital that's been spent. Then we'll put a roadmap that demonstrates when we intend to go into the next capital program. We will take a bit of a pause, do more work on the mining of the South Mine, the studies there and the drilling. There is quite an inflationary impact out there at the moment on capital costs. So we will pause before we launch into any large capital programs next for at least 12 to 18 months while we continue to do the studies and the drilling on the ore body. That's just a picture of our northern mine where we're currently mining. We've developed that mine down to about 300 meters from the surface, quite shallow. We now are drilling that ASX area that you can see. That's drilling in the southern port part of it to drill gaps that basically exist right below our current mining areas that have not been mined or drilled at all. And we know we have high-grade bodies that are continuous there. So all that drilling is happening in the next 6 months, and some of that will make it into our reserve and resource upgrades going into second half of this year. That's an isometric of the whole ore body. The northern end is what you saw just before, is only the northern half. The southern half is the large east-west system, which we're only accessing now. We're at the top of that now of the declines. We're starting to access level development. We'll be going underground drilling that. We're doing some drilling from the surface as well around those. But we're looking to basically define this system to its full extent, north-south extensions, and then any gaps. As you can see, there's quite a few down to 600 meters, and then look at extensions beyond 600 meters over the next couple of years. The The southern mine alone is a 3.5 million ounce mine and what's left endowment. And if you look at that alone, that we expect to add another 3.5 million ounces to the inventory down to 1,200 meters as we start to drill that southern ore body out in the next couple of years. We start that drilling, in fact, in April for some of the deeper holes to scope out that larger system. That's again just an overview of the exploration program, not the in-mine underground resource conversion. This is purely exploration, looking for extensions, north, south, the Bulletin offset, and we are looking at, as I said, the next 600 meters below our main biggest ore body, the east-west ore body, which are those holes to the south that are starting on the other side of the tailings dam, which requires some deep holes. Interestingly enough, we've got a lot of structures that have been defined by the geophysical mapping that will be drilled in the pre-collars as we get down to the main targets there as well. So we should be able to see a fair bit of interesting geology on the way through as we drill that. That's just an interesting comparison of some of the ore bodies that we all know. Jundee's only 50 or 40 kilometres away from us with Northern Star. The ounces per vertical metre at Wiluna are quite spectacular. We're at 20,000 ounces per vertical metre down to 200 metres, 15,000 ounces down to 600, but it's only partially drilled from 200 to 600. Very continuous shear systems and ore bodies. They are wider generally, and they're not nuggety and short strike lengths. So we tend to get, as we drill and infill, we tend to get an increase in ounces. So if we repeat what's known up in the top 300 meters or so, we expect this ore body to become one of the largest undeveloped ore bodies available to be developed in the next few years as we drill it out. So the sort of milestone to look out for, as I said, ramp up to commercial production is the key for the short-term work. Then really the update of the feasibility study and what we do next in terms of how we look at the next stage of studies and drilling to develop reserves for the larger scale development of the southern mine. The tailings retreatment plant should be commissioned and running by July. That adds about 1,200 to 1,300 ounces a month, and that's got a very long life reserve, over 15 years already drilled. And then, of course, the ongoing exploration and definition of both the main Wiluna system, but we'll then look at some of the other mining camps we have, as well as some of the regional opportunities, both, as I said, in nickel, because we have the extension of the Leonora, Mount Keith, and Honeymoon Well, George, because we've got 40 kilometres of that system on our tenements, which hasn't had any exploration in modern times, although we know we have sulfides there, and we also have very similar structural settings for the lithium deposit just south of us, like Liontown, which we haven't done any work at all, but we know the granites and the architecture is there, so we'll start doing some regional work on that stuff as well. Updated resources clearly towards the end of, and reserves second half of this year. London listing probably around mid-May, and then ongoing, obviously, quarterly reports and drilling. We tend to put our drilling results out on every twice a quarter, so mid-quarter and end of the quarter. So there'll be plenty of news for people to watch our performance and judge us by what we say we're going to do. So we are targeting by 2025 to be a top 10 Australian gold producer in a single location, single process plant. We have substantial exploration upside that's demonstrated and visible, which we'll start to basically review through our drilling. And we've got a solid now management team that's now in place, both at the operating, technical level and corporate level, that can support our ambitions going forward. The board, we've got pretty experienced people on the technical side, as myself, and then I've got Colin Jones and Rowan Williams. He's not on this list. Rowan, for some reason, this was put up the other day, but Rowan's on the board. He's a mining engineer. Not Williams, Rowan's Johnson. And Lisa Mitchell is a London-based Australian, but she's on a number of main board boards and been over there, so she's really going to help us with the London side of things. Hans Jul is a finance executive, corporate executive out of Germany. And then we've got Colin Jones, who's an economic geologist who's been around for a long time, who's assisting on the technical side as well. Sustainability, ESG, we have a very disadvantaged community at Wiluna. We are obviously working with them to try and better their lives with our presence as neighbours. We continue to work on bringing where commercially attractive future, maybe solar, maybe wind. We are looking at a cost of fence power from Nickel West who are putting in green power as well. So there's a number of things we're looking at over the next number of years. We continue to clean up the site. Tailings retreatment is part of that. We're looking at paste fill to put tailings back underground going forward. And of course, the treatment route long-term via pressure oxidation, which stabilizes the arsenic, is also part of our ongoing PFS and studies going forward. We talked about substantial infrastructure. To repeat the current infrastructure, as I said, we've got water, we've got power, we've got a gas pipeline. We have incumbency in terms of approvals. So our path to commercialisation, if our next stage of feasibility is successful, is quite much quicker than somebody that's just got a virgin deposit that needs all of the approvals and infrastructure to build further capacity. We have the capacity to get there a lot quicker because we have got so much sunk capital that's useful at the mine, including 5 declines into the ore body, good level development, let's say power, water, all the other things that go with developing a mine. The cost rates are now being sold. Let's say we've got contracts for 3 years for those, and that's going pretty well. We get paid on a weekly basis as we certify them. We can get paid at the port or at the mine. That's our choice, and that's going very well at the moment. So new tailings dam, we've got a village that needs to be upgraded. That hasn't been done yet. We'll be working on that going forward. We've got Burncut as our mining contractor with all the fleet required, two production rigs, four jumbos, a number of trucks and for service vehicles. So the only thing we're missing at the moment is maintaining bums on seats on a continuous basis, which we believe should be through the worst of it in the next couple of months as WA peaks with and catches up with the rest of the world in terms of COVID. Historical graph there, it's just showing that when Wiluna actually produced from its biggest ore body, which is the Wiluna sulfides, it was always the most successful. It was the biggest gold mine in the empire back in the 30s, produced 1.5 million ounces from the southern mine with a concentrator and roaster on site. Then in the late 80s, Osaka, Newmont, Great Central basically produced a concentrate and then put it through a BIOX plant, which is on care and maintenance on site, which we won't be using. We actually replaced the concentrator with a new one because the other one was too old. And our current strategy is to sell those concentrates into international refiners because the rates are quite good. Long term, we'll probably look at building our own converter, but that's probably going to be a pressure vessel down the track, not in the next immediate future. And we're just following what in fact has been the most successful route to commercialisation of the Wiluna ore body. And as I said, we'll continue to expand its scale and knowledge and look at some of the more regional location mining centres that can produce mines in their own right, but that'll be done in parallel as we reveal the full scale of Wiluna itself going forward. So that's me done. I'm happy to accept any questions or comments or criticisms.
Yeah, no, that was excellent, I must say. I think we do have a few questions. Once again, audience, if you want to send through your questions, you have the tab there available, and we'll get through to a few of those. I think a few questions that I've received earlier on is obviously the delay because of COVID has been a bit of an upsetting point. It's just preventing more things from happening. But what is the COVID plan from here? What are the steps that we're going to be doing to make sure that our workers and our labour is coming through and we're getting the most out as possible?
Right. So look, the immediate thing is we are maintaining, obviously, just because people are off from COVID, we are paying for that workforce and keeping them in our mix. So we're not losing our workforce. We have actually got a full contingent of operators, skilled operators. So we will get through the immediate, I'd say it's going to take probably a couple of months in my view, as soon as the rules around COVID, because it's about contact tracing that's the issue, not necessarily, let's see what the government does in the next few weeks, year or month. Beyond that, if COVID peaks, like out of London where I came from, people don't talk about COVID anymore in London. It's just another one of these endemics that people deal with. So It's not, so it's a question of how everybody deals with it. Beyond that, clearly WA has not had skilled labour coming in because of COVID restrictions. International issues around the world today mean that we have got a pool of international labour that Australia, from a skill perspective, needs to bring in. We have the right to do that under our immigration rules with the government. So we will continue to supplement any technical operating shortages that are in Australia from international hires over the next year or so. Australia just needs to get back to a reasonable skilled immigration rate, which is, we're probably 18 months away from getting to normalisation on that, which requires a boost to give both mining and agriculture, all of our businesses, enough skilled pool of labour to make sure that we're not stealing off each other and maintaining inflationary pressure on skilled labour.
Yeah, excellent. And obviously the roadmap you've been talking about, a lot of commercialisation is what we're trying to aim for. So what are going to be the costs and implications of that? Does that mean that potentially there could be a capital raise down the road? What's our cash position looking like?
Look, you've seen our January cash. We don't publish mid-month cash, obviously. So we had about, I can't remember, 42 million cash. We obviously continue to invest because we're still, the ramp up in the mine, the tailings dam construction and the wool tails completion is what's drawing net cash. Clearly we're getting a fair bit of cash flow in from the concentrate sales. We're at about half production in this quarter, which you'll see when the quarter comes out. And we're trying to get to about 6,000 ounces on a monthly basis by June, with a view to 8,000 soon after that. And that's purely going to be driven by the grade and volume of the stoped wall. So the sooner we can get to 4 grams a ton with 80% stoped wall, the sooner we get to 8,000 ounces, and then you've got the tailings retreatment to add to that as well. So we're in pretty good shape once that happens. How much cash we need and whether we need further cash, we're reviewing that at the moment. Obviously, we're trying to avoid any major dilutionary, capital raising, but clearly with the delays, we have to review that over the next month, and we'll see how we go. But I can't give you exactly what the nature is, other than we will try not to do too much in the equity markets. But if the company needs funds, then we'll have to deal with that when we get to that point.
Yeah, of course. And obviously, it's about timeline. And at the moment, we've had a few disruptions. Has there been any major changes to timelines at the moment, or is it all systems are still running quite well?
Look, the timelines are fine, other than, as I said, we pushed commercial production out by a few months because of the delays in ramping up the mine. So everything else is on track in terms of what we put out there. And as I said, we are looking at obviously other financing options, including streams on the tailings, which could be quite attractive for the shareholders, and refinancing of our conventional debt. Once our feasibility numbers are out, we can look at refinancing along dating the current debt. So there's other options to just obviously straight equity to continue our run rate and bring liquidity in for what we're trying to do. So we'll explore all of those, going forward in terms of maintaining our growth rate and progress, but obviously trying to get to a market cap that could support equity at a reasonable price for shareholders before we tap the market for too much.
Yeah, that's excellent. We might just jump to a few questions from the audience. We got a question from Jim. He asked, what's going to be the benefit of being listed on the London Exchange?
Yeah, well, that's a very good question, because we've sort of looked at that pretty carefully. Unfortunately, our London listing was delayed. We should have been in February, purely because of regulation issues, where everything else is ready over there. But because of this feasibility study and reserves we're updating, we couldn't produce a competent persons report in time to meet those deadlines. So we have to now finish this update that we're doing on the feasibility, just republish a competent person report, and everything else is done. So we should be ready to go in May. The main reason is most of our shareholders are European, and they're keen for us to be able to trade in their time zone, in their own space. The other reason is that we have lots of generalist money that's now looking at gold. They won't invest if it's in London into Australian listed stocks. So it gives us a pool of money that we can access that other because the pool of money in Australia is pretty limited, because there's lots of gold producers and lots of gold developers, and they're already set. So we're looking to make sure that we can tap funds to get us to the right scale, because our aim on listing on the standard board is not to stay on the standard board. We want to get to the main board, and the way we get there is we get the market cap up, because then we can hit the indices and you get the benefit. The second reason, or the third reason that's very important, is that if you look at what's happened in the London gold market, they've lost a couple of their better stocks through mergers. They've just lost interest in all the Russian investors. And then they've got quite a few African and other investors, whereas we go there with a pure single location operating growth story that's in Australia. That gives us a pretty unique run at that generalist funds that's looking to get into gold now. And we believe the generalist funds are going to now reallocate from growth stocks into gold and cash flow. We provide both cash flow and gold in a safe jurisdiction. That's different to what they've got on the market. So I think we will do quite well with the product as long as we execute on our plans, basically.
Yep. That was a great answer. That was very good. We've got a few questions here with regards to just the corporate structure. Can you dive into more of the expertise of where you're going to get the nickel and lithium coming from? So just with how the market's been going, obviously nickel and lithium have been striving quite well. Where on your board is there going to be the expert that's going to be helping through?
Look, we've got some good generalist geological and engineering experience, but we are getting external consultants who have been both in lithium and nickel to give us the initial review of our ground and initial targeting. So that's already happening. We've got those reports. So where we haven't got expertise, we will always, brains is the cheapest thing to pay for, and I always have that view. So we will find short-term assistance. If we decide that these regional opportunities have legs, well, we'll bring people in with those, as we always do, from the market out there that's available. So we've got enough geological experience generally to deal with it, and with expert advice, which we're getting from a number of parties. My chief geologist, Kane Fogarty, is dealing with that, and he's got a pretty good general knowledge of geology anyway. But so that's where we're at. Look, this is early days. We know that geologically we have potential. We don't want to overstate what we've got until we've done the work, but we know that the granites and the architecture and the ultramafics are all there, both for nickel and then for the hot granites with the architecture for lithium is on our property, and there's been no work. And we've got one of the largest pieces of ground on that continuous belt that hasn't been touched in modern times for any of the exploration.
That's excellent. That was awesome. Thank you. I think this might be one question people are asking just in general. There's been just quite a few. What are your thoughts on the share price at the moment?
Well, we're all, I'm a shareholder as well, so that's my wife. We're pretty disappointed with the amount of de-risking and progress we made on the project in terms of it has not reflected in the share price that we'd like to see. That's clearly the case. Given if you look at our production, look at our scale, you can compare us on any matrix. We've de-risked this asset significantly. Now, not all of that is in our control. Some of it's just legacy issues from Wiluna. Some of it's the market just going sideways. Once we start to get some momentum, something else hits the market. So we certainly would like to see in the next few months a reaction to the work that we've done and what we've produced to go forward, because we really can't keep going without getting some reaction on the share price for what we've done. So we're not happy about it. We can only continue to do what we do, and hopefully the market will follow our de-risked finished product, which is my view always. Ideally, I'd like to see the share price higher, but because I think the fair value, if you compare us to anybody in the market, it's probably double what we are today, easily, in my view, if you look at any comparable in terms of the scale of the resource, the production, what we've achieved. But we certainly haven't got there yet.
Yep, and it sounds like you've definitely got a few announcements in the making that should do something. But we'll see how things pan out in the long run. You've definitely got a lot, but at the moment we haven't got too many questions at the moment. So, Milan, is there any final comments or a message to shareholders you just want to express?
Yeah, look, thanks for the time, and we're pretty happy with what the team and the company's achieved with the money that we raised in terms of investing in the ground. Everything we said we would do, we've done physically. even our delay in ramp up is modest compared to what other people experienced, given the current shortages of people, labour, skills. So we're reasonably happy with that. Clearly, we need to get to commercial production as quickly as possible. That's probably a question mark that people are now they're saying, fine, you ticked all these boxes, but when are you going to be at commercial? The mine volume and grade, as I said, that determines that. Essentially, everything else is working. Our exploration results will now start to drive some of the other value. And when I look at my history, which is mainly being copper and coal and other sort of type of commodities, I find for the first time being associated with a large scale asset, which is why I'm here, that's got regional scalability. It's a good time to be in gold. I mean, I feel that given that we're producing cash flow and we've got a large endowment that can be converted to a mine plan, I think we're in a pretty good space here. We just got to get the share price up with some deliverables, and hopefully the market externally starts to get favourable for gold as well. So keep up the good work for my team. I thank all the shareholders that have supported us, all the way through to here. They've been very solid. Our biggest shareholders have never sold any stock in this company up in the last 18 months. They continue to support us. So we're pretty fortunate with that support.
Excellent. Well, thank you very much for joining us, Milan. It's been an absolute pleasure. To all those new shareholders, if you want to get in contact, we'll send through a bit of a link so you can talk to their investment relations. But apart from that, thank you very much, Milan, to jumping on board with Port Jackson. It's been a pleasure. Ladies and gentlemen, this will be recorded anyway, so if you missed the start or missed the end or whatnot, or want to go another bit, you can visit our Port Jackson website and re-watch it. But Milan, thank you very much for being on today.
Thank you very much, and all the best to all of you. Cheers.
Thank you.
Okay.